Okay, so I think I'm recording. Okay, so if you look at marketable securities here, it was 0. Okay, then if you go to look at the general ledger, marketable securities was 24,000 on October 1. So I say assume that was a purchase. Okay, when you purchase marketable securities, you debit this account at cost and how much you pay. Okay, so and then you have another disbursement of 4,090. So in your statement of cash flows under purchase of marketable securities, you'd have 28,090 as outflow.
That's what I have.
Okay, for the inflow, the 2765 that occurred in December. If you look at your cash receipts journal, okay, the 2765 right there in your cash receipts journal, that was a cash receipt of 4,130.
Okay.
So that's what you put in your statement of cash flows, an inflow of 4,130.
But how did you get there from the?
I just looked on my general. I looked at the general ledger. I saw it happened in December. I said, okay, I have a cash receipt journal. I'll just look.
Okay.
Yeah, that's actually what I got. I recorded that from class. So I've put that in for the selling of marketable securities and for the purchasing of marketable securities so we can see that cash flow. But I think I might have messed up the top part. What is that? The operating cash flows. But that was substituted in from what we put in on the income statement. Sorry?
I gave you a check figure for net income on the Canvas website. If you've got the right net income, your cash flows from operations is correct.
Where do you see?
Yeah, we looked up the formula for that again, and we typed it in. I actually looked it up in the book, but I don't think our estimate's right. Let me pull out my journal.
What worksheet do you find your net income on? Income?
This right here. When you look on your worksheet, when you come over here to income statement, right here, net income, that number will be your net income. I don't have my worksheets not filled in.
Minus.
And what'd you get? Did you get the check figure?
I got it. 2,703,000.
No, that's not right. Let's go back and look at your adjustments.
By the way, I appreciate you working with us right now.
Okay. But you can see my worksheet, right, Jeff? Sam?
Yeah, yes, ma'am. I can see yours.
Okay.
Can you see me okay, or?
Wait a second. If you look at the worksheet. Okay. What'd you get for bad debt expense?
Bad debt expense. What?
You credit to your allowance account. What did you credit your allowance account for?
For the adjustment?
In the adjustments column.
3,039.60.
Okay, that's correct. Okay, go down and look at cost of goods sold. What did you debit cost of goods sold for in your adjustments column?
1,067,000.
585.44.
What did you get inventory adjusted correctly? You're supposed to debit inventory for 85,456. Did you do that?
Let me go back up and see inventory.
67.
No, for inventory we put 1,067,000.
Against inventory?
That's what we adjusted it.
Okay, in the when you start your worksheet, inventory is 101,681, unadjusted trial balance.
Yes.
They tell you in the transaction list. Transaction list says inventory should be 187,137. So you've got to debit it for 85,456 to get there.
Okay, where did we go wrong?
Okay, so you just subtracted the difference.
Yeah, just the difference. Okay, that's part of your adjusting entry. Okay, the other part, you close out purchases, returns, discounts, and freight in. You close them out. You zero them out. See their balances, 1,128,000. You credit it for 1,128,000. Returns, credit 1945. So your entry is to debit at 1945. So you're zeroing out all these, and whatever you need to balance is your debit to cost of goods sold. So that should be the 1,031,578.44.
Well, at least I wasn't too off. Only tens of thousands.
Okay, and if you do this on the worksheet, you know, you can easily calculate the difference between inventory, right? And then come down here and you know you've got to zero this out, so credit it, you got to debit that, credit that. Then just look at the bottom of your worksheet, how much you're out of balance, okay? Would tell you how much you have to debit cost of goods sold.
So if you add, so which ones, how do you know which ones to close out?
Cost of goods sold is everything, you know, it's purchases, returns, discounts, freight. How do you know? Because you're an accounting major and you took 201 and you took 301, and that's how you know. And also, I think if you look in the reference manual, they show you an entry in the reference manual.
I think that's on page 80-ish. Yeah, that's what we used. I
Yeah,
don't
but
know
if you
how
look
I
at
got
the
this wrong.
reference manual, in that case, they were decreasing inventory, so they
Page 77.
in your case, you're increasing inventory, so you've got a debit inventory.
What page are you on, Sam?
What
Page
page are you-
77. Reference book.
What is it?
Inventory cycle.
What page?
77, ma'am.
77.
Thank you.
Yeah, we had the beginning inventory, and then I added together the net purchases, including the freight in.
Can I
and
see your
then
spreadsheet?
Sure, I can. So I've got you on my phone, but I can flip the
I
camera
don't want to see
around.
on your phone. Nobody see it. It's too little.
Okay. Yeah, sorry about that. I just downloaded Zoom again on my phone. Yeah, all I can say is when I added those things up and came out to be 1,153,000, and then we subtracted the ending inventory, which I believe is what we thought was the physical inventory taken on 1/1/18, as it says in document 1, that purple sheet, and that's how we got our cost of goods sold as 1 million. I was just following the formula.
Here's what the entry looks like. Debit cost of goods sold. This number is a plot. Debit purchases, returns, discounts. Those are in your spreadsheet. Debit inventory to get it up to the balance. Credit purchases for what's in your spreadsheet. Credit freight for what's in your spreadsheet. And what you need to balance is a debit cost of goods sold. But again, if you just use your worksheet and just know that which accounts you need, okay, all you're doing is closing them out, and this number, like if you don't put it in, you look down, oh, my worksheet's protected, I can't do it. You can do it on yours. It will zero it out.
So
Have a seat, Christian.
One of the questions I wrote down too was the federal income taxes.
Well, you can't get federal income taxes until you get your net income before your inventory closed out correctly.
Okay.
Okay,
But
but let's
once we
just
do
look at
that-
this. Did you get, we know your bad debt expenses right. We know your interest is right because we did that in class. So we know depreciation is right. So if you get, once you get your inventory right, then you should have, let me tell you what you should have. You haven't done taxes, right?
We did everything, but it was based on bad info. So
Okay, well, once you get your, let me get the right sheet here. Okay, and I'm looking at the solution here. Your income before income taxes should be 186,301.
income before taxes.
Yeah, and then you calculate taxes based on that little schedule they gave you in your book. So it's 39% times the excess over 100,000. So you take this excess, which is 86,301.89, multiply that by 0.39, and then add the 22,250.
That we were making it so much harder.
Well, taxes are hard.
So the way I did it in a spreadsheet, I taxed the first 50 and taxed the next 25, the next 25, then the next 100 or so, and then whatever the
Yeah,
excess
you can do
was
it
left
that
over.
way. You should come up with the same answer, but in this particular practice set, they just gave you the total amount on the first 100,000, 22,250, which is what you should have come out with doing that little schedule.
Where's that number at?
Okay, in your reference manual, or in your instruction booklet under income taxes,
Page 14.
page 15. You see that, page 15? I
Yes,
don't know if
ma'am.
you can see. Where am I looking? Can you, where am I
Yeah.
looking to put this?
Otherwise, go to keyboard. I think it's
Yes, page
I think that should
15
be
in the
camera,
middle.
but I don't see me. I just see him now. But it gives you the little schedule and tells you, if your income is, between 100 and 300,000, then your taxes are at this rate.
Okay.
Okay, but you can do it your way also, and you should come up with the same answer.
Yeah, but we were calculating that based on a income
Yeah, well, you got
before
to get
taxes
cost of
and
goods
the
sold. If you
information was
understand
bad.
cost of goods sold, you understand that you got to debit inventory to get it up to that final number, 187. You've got to close purchases, returns, discounts, and freight. And then whatever you need to balance is your debit cost of goods sold.
Okay, so I'm trying to understand it. Where we went wrong we thought that what it was giving us on, I thought this on SUA 6. I take all the credit for the mistake, but where I went wrong is I thought that this inventory on hand was our ending inventory since it was the most recent one taken. Does that make sense?
Okay, what did you think?
I thought that this was our ending inventory because this is our most recent physical inventory taken.
Yeah, the 187, 137 is your ending inventory.
Okay,
But in your
cool.
books,
So I
it's
got
at
one thing
101,
right.
681.
So from that, I just went to the formula on page 77. I found the beginning. I added up the net purchases, including the freight in, and then I subtracted the ending. And I thought that would give us the cost of goods sold.
That should work.
Nah, it
One of
totally
the
didn't.
example to give you on page 77.
So unless my math is
Yeah.
completely wrong,
Page 79. In that case, they're having to decrease inventory. We're having to increase. So you'd have a debit to inventory instead of credit to inventory. But the entry otherwise is the same. It's just your numbers are different.
I'm sorry. Say that one more time. You said that they
Okay,
were.
I'm looking at the little example on page 79.
Is it 79 or 77? Because I think we're on a
Well,
different page.
79 is where the journal entry is.
Okay.
See that journal entry?
So page 79, that's the right side of the page near the
Yeah.
bottom?
Yeah,
Okay.
down near the bottom.
Okay.
See, they debit purchase discounts, debit purchase returns, debit cost of goods sold, credit purchases, credit freight, and then they credit inventory. Your debits and credits will be the same, except inventory will be debit because you're increasing inventory. And then all your numbers, of course, are different.
Okay.
If you look at it, the journal entry, can you see this on my spreadsheet? Or I don't know if you're looking at my spreadsheet.
I am now.
See, debit cost of goods sold, debit purchases, returns, discounts, debit inventory, credit
Well, I
purchase.
can only see it. Oh, there we go. I had to turn my screen. Okay.
So you debit inventory and credit cost of goods sold.
Well, you have to debit and credit all these accounts because you're trying to get rid of your closing amount.
Okay, wait. So
Just like in this entry. Discounts, purchase returns, purchases, freight. Okay, inventory is a debit. And then whatever you need to make it balance is your debit and cost of goods sold.
got it. So is it 101? 7844.
Yeah.
Okay, that's
Okay,
my difference.
okay. So what do you have in your worksheet? You're looking at your worksheet. That's the best place to be, which you don't have in front of you. But you look at your worksheet, and on your worksheet says inventories 101, 681. You've got to get up to 187, 137. You've got to debit it to 85, 456 in your worksheet. No, well, I don't really like you putting it there first.
All right.
Okay.
I feel clicking right.
You could go to your general journal and do it in your general journal.
And so where were we supposed to find the net income?
Well, if you look at your worksheet at the bottom of your worksheet before you do taxes, this number says net income. That's your income before tax. Before, if you haven't put taxes.
Mine said negative. Mine's negative 210.
On your worksheet? Let me look at your worksheet. Okay, that's because you've already put in a number for taxes.
Okay.
Get rid of it. There's delete. Backspaces and delete. Okay. So you get rid of that and you get rid of your baby.
She's like 3 months.
Okay, so now yours before taxes is 186,301.89, and that's what you calculate taxes on, and that is the right number. Okay.
Thank you.
Sam, I don't know if
Yes, ma'am.
if your worksheet's the same as hers. She
I
had,
don't know if it is either. Sounds like it though.
she had a number in for income tax expense. You need to get
Okay.
rid of because you need to take that out of there right now.
Income
take-
tax expense.
Take out
take
your
that out.
adjusting in your adjustments column, the whatever you put for, she had like 397,000 or something. Take that out and also take the number off of income taxes payable. You just delete
Okay.
those, and then whatever you have right here under in the income statement columns. I'm in the income statement columns. I have income, and yours is like going to be like 186 something. Then you calculate tax on that number, and then you come back over here and put the number in next to tax and tax payable.
Oh,
And then your
okay.
net income will be what I said it should be on Canvas.
So you do. So you 86, 381.89 times. And is it
Times 0.39,
39?
and you add to that number 22,250.
Where did you get the 22,250?
In that schedule, right here, in that schedule.
Oh, right here?
Yeah,
Okay.
22,250 plus 39% times the excess over 100,000.
You put that in.
What'd you get? 55 something?
50.
Put it next to income tax expense in the adjustments column, debit, and then against income tax payable in the credit column.
Man, if you repeat this stuff the times and I read it, but it takes a second for it to click.
Well, you have to think about it. Was it somebody?
That's why you said
Somebody the other night, the guy who created the periodic table, he did it while he was sleeping. I tell you, your brain works while you're sleeping. You come up with you really do start understanding what you start thinking. Yeah. Yeah. Well, you figure it out in your sleep. And my husband's the same way. He's an architect. He's always figuring out some problem while he's asleep. Or if he's out doing manual labor, you've got your mind somewhere else. You can figure things out.
Or cleaning up baby poopy.
Yeah, true. That will do it too. Okay, let's go open a different sheet. Let me find a different sheet. Let's go.
Okay, and so this is what I have for my general ledgers so far, but I put bad debt expense, bad debt allowance, but for this one,
Oh, it's gonna be that long entry.
okay, so I have to.
Yeah,
You have to write down all closing balances.
Mm-hmm.
And then we post all of these to our subsidiary ledgers, right?
Mm-hmm.
Okay, that's
Yeah, I need the answers in here. I'm gonna do that.
Yeah, my job is fun. I'm going to quit Walmart. I got to make it to the end of the semester. And next semester, I'm taking the class. But after that, I'm done with Walmart.
Yeah, they're really bad about not giving you reasonable hours.
They like give me more hours.
Yeah.
I'm like, I don't want to work that many hours. I've had to go in there a number of times, so it's taking me off the schedule. I'm going to school full time and doing this and taking off. They usually take you off though. You gotta go
But you
ahead
have
of
to
time.
keep
Though.
asking.
Yeah, you gotta go ahead of time. Don't go the day before and go, oh, it's too late now. So they learn now though. They don't put me up there anymore. Because they know I look at it as soon as it comes out. Nope. They give you 3 weeks advance notice, and I'm like, I'm gonna put taking off. But you don't pay me enough to do this.
Okay, once you get taxes in, your statement of cash flow is the top part's right. Once you come up with that right net income, then the statement of cash flow is the top part's right. So all you do is figure out those other numbers.
I got a question about appreciation in the bank.
Mm-hmm.
Do this. Okay, supposed to this number. What you bought it for? You like that price, right? So, buy it this year. Should we do half of it?
Okay, the year you bought it, that was 2015. You did half. 2016, you do a whole 17 year range.
Okay.
Okay, and if you flip over to the next page, when you come and do this, now you bought it this year, so that's a half. Okay,
All right.
and this is a half. When you do this, you should do a half. But everything else will pass that half year, except for the 2 assets that we bought.
Okay. And that's
I have a question about that too. If I could
What's
butt
your-
in though.
What did you just say?
that's supposed to equal that 35,000 you're done for accumulate
Uh-huh.
depreciation.
35,023 something. Okay, what was your question, Sam?
We said in class, I wrote down this in my notes, but I don't know if it's right. We said we debit depreciation expense, but we credit fixed assets, or do I have
Oh,
that
you
wrong?
credit accumulated depreciation.
Okay.
Okay, so losing the line.
I know it is so many different places.
My thing came up too. I stapled it back in already, but it doesn't want to say. So for notes payable, we borrowed 60,000, correct? And then we paid back 13,000.
Yeah. So 60,000 in, 13 out.
So it should be 47,000.
And you didn't know those, right? You listed them separately.
Yes.
Okay.
And so for sale of marketable securities, I have 4130.
Right.
Purchase, I have 28,090.
Mm-hmm.
But purchase of equipment, how do you know what you purchased for cash?
Okay, it's harder to find. Let me go back and look at the. Gotta change workbooks. Okay, so if you look at fixed asset, okay, October 1 is 320. If you look in your worksheet, the end of last year was 320, so nothing happened all year. Okay, then you have this sale, okay, and that was Jim Adams. You received no cash, so you don't have to worry about it. This is an acquisition, okay? And it happened in December, okay? And if you look in your purchase journal, that was the source. Let me go find my purchase journal. If you look at your purchase journal, okay, you purchased one asset for $7,367 and one asset for $3,699. Okay, if you look down here in cash disbursements, you paid for the 7,367. Okay, but you never paid for the 3,699. You know, you've got the 7,367 right there. You don't have a 3,699. You don't have another entry to Chicago Office Supplies. Okay, so the 7,367 is what you put in your statement of cash flow. Purchase of fixed assets, negative 7,367.
Can you say that one more time?
Okay, I went to fixed assets
Mm-hmm.
and I saw what happened. Oh, I'm in the wrong place to be able to really see this. That's what my general ledger. This is, we remember that transaction. That was the sale to Jim Adams. He didn't give us any cash. That was the two entries from your purchase journal. Okay, and if you look in your purchase journal, wherever it is, you look in your purchase journal, okay, 7,367 and 3,699.40. Those are the two entries to fixed assets. Okay, but whether or not they go in the statement of cash flows depends on if you paid for them. Okay, and again, they happen
So
to,
if they went on there, that means you paid cash for them?
Yeah.
Okay.
Yeah. And what we're trying to do is find out, did we pay for it?
Mhm.
So since this happened in December, you look down in your cash disbursements journal and you're looking for Chicago Office Supplies
Mhm.
because that's who you're buying it from. So 7,367, that was a cash disbursement on December 12th. Okay, but there's no other entry to Chicago. So we didn't pay for the other one.
So,
Okay, plus if you look at your account payables to Chicago, let me go to account payable subsidiary ledger. If you look in your account payable subsidiary ledger, the 7,367 liability, the payment, the other liability. So that you haven't paid for this year. And you don't have to worry about the 602,666 because that's operating. It's in that income from operation number, so you don't have to worry about it.
for the loan to employees, it says you did not receive any cash from fixed assets since.
Okay, but let's look at your worksheet, year-end worksheet. Okay, accounts received from employees is 375, but we know we haven't received it, right? Okay, that's receivable. Remember, money?
Yes.
What's that noise? Maple Valley?
That was me. Sorry, I'm warming up the baby's milk.
Oh, I was wondering, is the fire alarm going off?
No.
8,000.
So,
And that was actually, we actually wrote them a check. If you look in your cash receipts or cash disbursements journal, you actually wrote them a check.
is that a negative 8,000?
Mm-hmm.
And then I put, but I'm still off by negative 56,000.
Okay, what you have a plus 60,000 and a minus 13,000, and you have a let me look at it. Okay, the sale of market securities plus the purchase of market securities and negative. So it's 28 and out. These are negative. Okay. And I'll put the problem up.
Yes.
Okay.
Is that so? That would be Jim Adams paying financial forms in good financial statements in good form. So when it's prepared, we supplement our balances.
Yeah, we've already done them. We did account payable schedule. We did account receivable schedule. No, you can't do them in Sage. You had to do them extra outside of Sage.
Mm-hmm.
But you did them. You turned like the second assignment, HUA 2, you did an account receivable schedule. HUA 4, you did account payable schedule. Okay, the fixed asset schedule you haven't done yet, but you have to do it as part of this assignment. So what I'm saying is just go back, if they were correct, just move those sheets into this work.
Got it. And here they call it trial balance. It's the same thing.
Mhm.
No one can look for that. I don't think.
Okay. And then for the fixed assets, is it the ones that we have in the back of our?
This list, you've got six assets.
Mhm.
This lists costs and accumulated depreciation and book value for each of them. And some the cost, some the accumulated depreciation.
So we sold debt now, it's short value is 12.25, right? We sold it.
Yeah, so the book values change from the original number.
So it was zero.
Well, book value is zero, it's still zero. But the numbers that you use are cost, use that adjusted, you change the cost right there. It was this number, you just reduced it, so you use the new number. Okay, so that would be your cost. This would be accumulated depreciation, it should be the same, so the book value is still zero.
So it would be like this right here.
Yeah, that's exactly what you're doing.
Um, And then on number 7, it says Jim Adam posts the adjusting entries from the general journal to the general ledger.
Mhm.
Is that just post?
Yeah, you've got to get back to your general journal booklet and write out all those adjusting entries.
And then that just posting
And you
those
just post it to the general ledger.
Mhm.
And then you do your closing entries. Do a closing entry. You debit, sales, credit, income summary. Okay, after you close out all your revenue and expenses as a journal format, then you post it to your general ledger. All those accounts after retained earnings should all go to zero.
Right, I have class at 12:30, and then if I can't figure this out, you'll see me again.
Okay.
Yeah.
Any more questions?
Not at the moment. Hopefully this will help.
You got any questions? You want me to help you with that baby bottle?
Actually got to wake her up right now. Thank you so much, Miss R.
Okay, good luck.
Thank you.
I'm gonna cut you off.
Alrighty.